We go. Hey, everybody.
Hey there.
Hey there.
Happy Wednesday to everyone. This is our second Queer Money Live, and we're excited. We're loving these. We did them before, and we had to take a break, and now we're excited to have them back. If we sound a little bit echoey today and we seem a little bit stressed, it's because it is echoey, and we are a little bit stressed. We are in the midst of moving from Colorado to Pennsylvania. So our pod arrived today. The movers arrived this afternoon. And then we fly to Pennsylvania on Friday. So it's a little chaotic and hectic here in the DFG household.
Yes.
Schneider household. Hi, Saw. How's it going?
Hey there.
Good to see you.
All right. So we got a great topic this week. So
Yes.
we had a question from Mike.
Mike asked, what steps should couples take before buying a home together? So Dave and I thought about this long and hard. We did a bunch of research, and we came up with 5 steps that couples should take before buying a home together, plus a bonus. So you're going to get a little bit of extra out of us today. So do you want to kick us off with the first step?
Sure.
Sir?
Yeah. So the first step is probably one of the most important because it kind of gives you a financial checkup. As a couple, obviously, you've been talking or fantasizing about this idea of buying a home together, or maybe driving through neighborhoods and picking out homes. So the first one is to do a financial checkup, and that financial checkup, one of the easiest ones to do is to go out there and get your credit score. So the idea with getting your credit score is it kind of lays the foundation for you as a couple to start talking about where you're at financially. So if you both have great credit scores, that's awesome. You know that you're going to probably be able to interact with a lender, have conversations, and probably talk about getting some of the lowest interest rates possible. So that's why your credit score is so important. Second, if you're not seeing eye to eye on your credit scores, let's say one of you has a good credit score and one of you has a not so good credit score, it gives you the opportunity to start having that conversation with each other about how can we improve the one credit score so that we can actually purchase a home together. Because when you're purchasing it together, that one bad credit score can drag down your overall ability to purchase a home. It actually can increase your finance costs. Your interest rates will be higher. So you want to make sure that you're seeing eye to eye. And if you both have low credit scores, then it gives you the opportunity to have a serious conversation about whether or not buying a home is the appropriate thing to do right now, or maybe you need to fix your finances before you take on such a huge financial commitment.
So where do you find your credit score? Well, there are a number of places. And I don't know if you've realized lately, but we have over the last couple of years that almost every financial institution, from credit cards to banks to credit unions, seem to be sharing their clients' or customers' credit scores somewhere on your account online. I know that we have an account with Chase. They offer it. We have a credit union here in Colorado. They offer it. They do get their data from different sources, so it's not always identical. They do tend to be similar. But so what we would recommend you first doing is checking with your current institutions, wherever you have an account, to see if they might offer that credit score for you. You do sometimes have to do a little bit of digging. It's not always just splayed out there on the homepage. You do have to dig a little bit. I know that one of our accounts is a little bit circuitous. So dig a little bit. You shouldn't have to pay for this. This is what our point is.
Yep.
Your current institution probably offers your credit score for you to start off with. If that doesn't work out for you, check out, we'll include this in the comments section, but Nav created a list of 150 places you can go to get your credit score for free. You want to go ahead and link it in there?
I'll paste that in there. Hey, Sarah.
Hey there, Sarah. It's a great article. It's very comprehensive. You probably recognize a lot of the institutions that are on there, but if your current institution doesn't offer a credit score, you can check out this list and see where you can find a credit score for free without having to actually open up an account somewhere. And then, so we would recommend going to those 2 places. Then our next recommendation within this particular bullet point is to download our credit score repair checklist. If one or both of your credit scores isn't where you want it to be, then we recommend you download that checklist. It'll provide you a step-by-step process to improve your credit score. Now, your credit score won't improve immediately. It may take some time. It could take up to 2 years to see some significant or worthwhile improvement in your credit score. But as David mentioned, having a good credit score could save you tens of thousands of dollars over the lifetime of your loan. So it's critically important to try to get that credit score up before you even start considering buying a home, because you could be costing yourself a lot of money in the long run as a couple. And if in that research here you find out that your credit scores aren't good, you do want to start improving your credit score. One of the first steps there would be to get access to your 3 credit reports from from Experian, Equifax, and TransUnion. No, I forgot that one. You can request all 3 of them from freecreditreport.com. So go to their website. They have a phone number. You can also submit a request online to have those mailed to you. It can take up to 30 to 60 days to get all 3 credit reports in your mailbox. But when you get that, then you can start the process of going through your credit reports to see what information is accurate or inaccurate, what you need to update. And all of that is spelled out for you on the free credit report repair checklist that we provided you in the link above.
Yeah. One of the things I would recommend with that is if you do have a lower credit score, is apply for just one of those. Don't do all 3 right away. Just do one. Then maybe start making some changes in your spending or how your payments to your credit cards or whoever you're making a payment to. Start making those improvements. Start looking for the things that you can fix on your credit report. And then maybe 2 months later, go out and get the second one. And so you can see if those changes are actually taking effect. If you can see that they're actually removing some of those bad marks from your credit report.
Cool. So next recommendation of the 5 is to, and this is the fun. The first recommendation is procedural and boring probably for most of us. Number 2 is sort of the fun part. Decide what your must-haves are as individuals and as a couple. It might be, as David and I were talking earlier this week, you might both have a dog. And so you would definitely need to have a backyard. And that might mean you need to give up living in a certain location. You might not be able to live downtown because there aren't lots of yards downtown. So talk as a couple about what's most important to you in a house. David and I realized in our quest to pay off our credit card debt that having a gigantic, expensive house was really not important to us. We want to have a nice home. We want to be warm and comfortable. We want to be able to have friends over and not be embarrassed where we live. But having a big, gigantic home that has all sorts of fancy fixtures and furniture just really wasn't that important to us. And that helped us direct where we wanted to buy our first condo. So talk between yourselves about where it is you want to live. What type of house do you want? What size house do you want? What amenities do you need? Do you need to have covered parking? Could you go without that? Do you need to have a yard? Do you not need to have a yard? Do you want to live in a condo building as opposed to a house or vice versa? Right. Can you tolerate living in a condo building? Lots of questions that you want to ask. Then you also want to find out what condition home do you want to buy? How much work are you willing to put in as individuals or as a couple into fixing up your home? I don't know how to do a damn thing.
No, not really. He doesn't.
So if we wanted to buy a fixer-upper, David would be doing a lot of the work or teaching me to do some work, which could, maybe make our relationship a little bit acrimonious. So what kind of condition do you want to buy? So have those discussions and try to pare down. As with anything, when you're trying to figure out your financial goals, or the type of house you want to live in, the fewer must-haves you have, the easier it's going to be for you to find the home that you want. So right. It's kind of a double-edged sword. You want to have the things you want to have, but you don't want to pin yourself in a corner. So talk about what the most important things are as a couple, get on the same page, and then you can start looking for your home.
Yeah. I would also add there on the list of must-haves is to remember that the vast majority of individuals who purchased property in the gay ghettos did not buy those homes when they were in pristine shape. A lot of people bought those homes in Hell's Kitchen, in Chelsea, in Castro, in some of these neighborhoods that now today are prized neighborhoods. They have made such financial progress because they actually purchased a home that was in an area that was maybe not as nice as they had wanted it to be, but they help gentrify that neighborhood. So if you don't have a significant amount of money, or if you want to try to position yourself to have lots of big gains, then sometimes letting go of some of those must-haves will allow you to fit into some of those neighborhoods that you can see that the path of progress is coming. So, and that might be a good conversation to have with a potential real estate agent, is where do they see the path of progress happening in your city or in the city you want to move into?
Yeah, I'll add, when David and I looked to buy a home, shortly after we paid off our credit card debt and we had some money saved up, and we decided, because we both worked in the same industry, and actually at the time we worked for the same company, we decided that a big fancy home, expensive home wasn't important to us. And because of being both working for the same company, we decided that we didn't want to buy too expensive of a house. One, because we don't want to be house poor, but two, if the market had gone against us, or we were both at risk of losing our job and what would we do? But the likelihood of that happening was probably pretty minimal, but the possibility of one of us losing our job was possible. So we decided we didn't want to look for a super expensive home, and we capped ourselves out at 1.5 times our annual income at the time, of the maximum we wanted to spend. And our agent at the time knew what our salary was, because they had to verify whether or not we were worthwhile customers, and he kept trying to encourage us to buy 3 and 4, even 5 times our annual income at the time. And by far, that was the best decision David and I ever did, because we bought at the peak of the market, and then right after that was 2008, and the market tanked. And we were underwater for several years, but nothing more than, I don't think, like $15,000.
Right.
And at that time, there was a risk that one of us could have lost our jobs because the market was going so sour. So, and in hindsight, we have saved so much money because we bought such a cheap home and have put ourselves in such a better position. So our recommendation to you is don't overextend yourself. Right. And that's why I think it's important to really talk about what your must-haves at a very granular level.
Yeah. Hey, just say hi to Cody and Matt. Thanks for joining. I would also encourage you, when you're talking about this whole idea of must-haves for buying a home as a couple, especially if this is your first home or maybe your second home, remember that the average American stays in a house anywhere from 5 to 7 years. So it doesn't need to be a perfect home the first home you purchase. I completely understand the desire and want to have that perfect home the first home you purchase together, but oftentimes a perfect home is going to cost you considerably more. And as John mentioned, it may put you in a position where if the market does soften up, or we do go into another recession, it maybe puts you in a position where you can no longer afford your home, which is definitely a situation you don't want to be in.
Exactly. So we probably got a little bit ahead of ourselves here, but our third recommendation is to review your budget. What is it that you can honestly afford, that you're not going to overextend yourself, or you're not going to hurt yourself in the long run? And it's important to remember that you probably have several life goals, and it might not be that you just have one goal of wanting to have a fabulous house. Yeah. So based on what it is your must-haves are, and based on what your credit score is, what can you and your partner or spouse afford realistically? What's going to fit into your budget? And you have some other costs to think about in addition to just the value of the home. You're also going to have closing costs depending upon what side of the market you're on. But you're also going to have, in addition to that, real estate taxes. You're going to need to pay for homeowners insurance possibly. What is it going to cost you to be able to maintain your place? When you move in, depending upon how much of a fixer-upper it is, how much work are you going to have to invest in the beginning to be able to make it livable? Are you going to move into a condo building or in a homeowners association? And can you pay for those fees, which can be monthly or annual? So there are other extenuating costs that you want to consider. So think about what it is realistically for you and your partner in terms of fitting into your budget. You might need to talk to your real estate agent about that. How will you assume the debt? Where are you going to get financing? How will you buy things? And then, like I said before, what are your other financial goals? You don't want this to sort of sabotage any other financial goals that you have.
Right. Yeah, I would go back to the kind of that idea that John was talking about of adding in the other costs. It's easy for us to kind of have a picture in mind as to how much we can afford. Let's just say I can afford $1,700. So then we go and we look at how much money we could borrow with $1,700. But as John mentioned, a lot of places, a lot of states will now require that your taxes are calculated in with your mortgage payment, that your PMI, which is mortgage insurance, is included in that. And sometimes even some of your lenders will require, especially if there's an HOA, that you factor that in as well. So if you're playing around with your mortgage calculators, don't just look at that payment, because there's a lot of other costs that can be included. That's when you want to start having a conversation with a lender, so they can give you an idea of what kinds of other things your state requires you to include. So, and then eventually talking to an agent, because they're going to be able to get specific about the properties you're looking at. And do your research, especially when it comes to condos. Do your research to see what the trend is, or how much your HOA costs are, because as a lot of times those are, I don't want to say necessarily hidden, but they're not made readily available to individuals. So ask your agent to ask the owner of the property to provide you at least 3 to 6 months of financials for that HOA to see where they're at. Do they have a large amount of money in reserves? Are they keeping up with making all of their payments? So those are important factors, because you don't want to move into a place and all of a sudden find out that you have a $10,000 or $50,000 special assessment coming because of HOA costs. So be very careful or make sure you include those in with your overall costs.
Exactly. And that's a great segue. We put these in a brilliant order. That's a great segue into our next recommendation. We asked several friends who are real estate agents, what is the most important thing that couples should do before they start looking for a home? And I thought it was ironic that every single one of them said the first thing that they would recommend doing, and they're coming at it from the agent perspective, is that they want their potential clients to talk with a lender or a broker and assess the possible financing, and to be able to get a good faith estimate before you engage with a real estate agent. They want to make sure that you're capable of being able to buy what it is you are indicating that you want to buy, so that they're not wasting their time showing you properties and researching properties and finding out all sorts of information about properties, and then only to find out that you don't actually have the funding to be able to pay for that. So their recommendation is to talk with a lender or a broker to establish your financing. They did recommend avoid getting online quotes. Those quotes are not typically very firm. They don't take into consideration all the factors in your financial situation, and it's hard for them to sort of work off that. So avoid getting online quotes. You might want to, if you do want to go that route, maybe just use that as directional information before you actually engage with a lender or a broker, but definitely get that good faith estimate. If you don't know a lender or a broker, your real estate agent should have several that they can recommend. And very often, if you able to get people who are familiar with working together, they can work to your advantage, try to get the right financing for the right house and make sure everything works out for you. So it's beneficial for them to sell you the home, but only if you can afford it, and getting them to work together can really help you in the long run.
Yeah. So it's interesting. Thanks, Matt, for your comment here. I really appreciate this idea of being house poor, because one of the things that absolutely will happen for you as a couple is when you purchase a home, whether it's a house or a condo, whether you have maintenance taken care of or you do it yourself, your lifestyle is going to change. And if you purchase too much of a home, one of the things that may end up changing significantly is your ability to do the other things that you love in life. Being able to travel, being able to go out and do things with friends, those kinds of things may end up changing. So you don't want to overextend yourself, especially based on your current financial situation. So if you're paying as a couple, let's just say you're paying $2,000 together as rent, that's a fair chunk of money. So you want to make sure that you back into all your costs so that you don't go over that $2,000, because then you won't have significant financial impacts on your lifestyle.
Exactly. And then our fifth and potentially final recommendation.
Potentially. We do have a bonus.
is, and this is particularly important for the LGBT community, especially if you're not a married couple. And that is to handle all the legal matters. In doing some research, we found that it is quite common for same-sex couples or LGBT couples to buy homes together and not actually be married. And that could be a problem if something happens to one of you. one of you passes away, and you haven't officially drawn up the legal contract of who owns what. You just being there and paying rent or mortgage together doesn't mean you both own that home. And if your partner passes away and you think that this house is yours and their family doesn't think it's yours, you could put yourself in a pretty bad predicament. So especially if you're not a married couple, draw up what's called a co-ownership contract. Decide who owns what, what type of property or ownership will this be? Are you going to have, is this going to be a sole property where just one of you owns it and the other one lives in it and pays rent? Is it going to be a joint tenancy? Or is it going to be a joint tenancy, a tenants in common where one of you owns a percentage and the other owns the residual? You want to divide that up and have that all clearly spelled out in legal contract so that if anything happens to your relationship, hopefully not, that you've already address these matters in the beginning, or if anything adverse bad happens to your partner, you have protection so that you can maintain the ownership of what it is you want to own. And with regard to the type of title you want to choose, whether sole, joint tenancy, or tenants in common, you can add beneficiaries onto those that ownership. So if one or both of you passes away, you can transfer ownership to whomever it is in your family or your friends that you want to transfer ownership to should anything happen to you. And that beneficiary supersedes anything you would have outlined in a will. So it's just an added protection because even though we do have marriage equality, we're not necessarily treated as equal. So you want to be able to make sure you have all your legal matters in place so that things work out the way that you intend. Did I cover everything?
Yep, I think that was good.
You want to share the bonus, Mr. Alton Schneider?
Yeah. So, of course, the bonus one is one that is important to us, and we want you to actually be really prepared financially to take on this responsibility. Buying a home is a huge responsibility, and it can, as we've mentioned before, cause a lot of financial stress. So we encourage you to save a 20% down payment. Now, I know for a lot of you, you think, oh my God, that is so much money. But just think back to 2007, 2008, when individuals had purchased homes and a lot of them bought them as interest only. They weren't paying any money towards the principal. They didn't put any money down. And all of a sudden the market turned. And we saw a lot of individuals who couldn't afford their homes because they had planned on the market just continuing to go up. So we want to make sure to focus on trying to save a chunk of money. We prefer 20%. Now, again, that's a lot of money, especially in some markets, but it is one of the best ways to protect yourself to not have your home taken away from you by the banks, even if the market turns. Because that will happen is when the market turns, banks will get scared and they will start to pull back and start to look at individuals that they need to foreclose on. So we want to make sure you're taking care of that. The other important thing when you think about putting a down payment, whether it's 5%, 10%, 20%, any amount of money, as a couple, you want to talk about how you're going to do that. Because remember, if you do move into a home as a couple and purchase a home and one of you puts down a significant amount of money as the down payment, that money is basically being given to the other person. So you have to be careful as to how you fund your home because that money is no longer yours. You can't expect, unless you write up specifically in a, what do we call it? The
co-ownership contract.
Right, in the co-ownership contract.
Hashtag.
Yeah, then you are basically giving that money up. So you want to make sure that you're doing that in line with how you as a couple want to contribute to your down payment.
Exactly. And I just realized this is why we need to get Queer Money mugs, because then people can see. It'd be like when they have Kelly and Ryan. They always have Kelly and Ryan on the show.
Oh, really? Yeah.
We could be like Kelly and Ryan. Okay.
Am I Ryan?
So those are 5+ recommendations. One, confirm your credit scores and improve them if you need to. And you can use the credit score repair checklist that we linked to above to help improve your credit score if you need to. Second, decide on what the must-haves are for you as individuals and as a couple in terms of the type of home you want to buy. 3, review your budget and make sure you buy what you can afford. 4, talk with a lender or a broker about financing and get your good faith estimate before engaging with a real estate agent, or at least putting them on the hunt for a home. 5, handle all your legal matters. And then the bonus is to make sure you have your 20% down payment. I would also add in that 20% down payment, start saving or figuring out how you're going to finance any maintenance or upgrades that you're going to want to do after you buy your home. You don't want to forget about those that potential work. So that's what we have for you today. Thank you so much for joining us. Again, click the link above to download the credit score repair checklist. And I just drew a blank on what we're talking about next week. Do you remember what we're talking about?
I don't, sorry.
I'm sorry, I just drew a blank on what we're talking about next week. But we'll be sure to send out that invite tomorrow. I think it has something to do with credit cards, but I can't remember. Anyway, so thank you very much for joining us. If you have any questions, as always, ask them in the comments and we'll continue to respond as the week goes on. And if you have any topics you want us to cover, also let us know that as well, and we'll add that to our itinerary. Thank you so much.